Youssef, good morning to you and happy holidays. We heard a similar tone from Megan a few minutes ago. She's positive on tech going into the next year. Which parts of the sector, and what about the Fed? It seems that a lot of these names, especially the higher growth ones, are reacting more to a potential Fed tightening next year, not these underlying digital trends that came with the pandemic.
Yes, good morning, Deidre, and happy holidays to you guys as well. So a couple of questions there. So stepping back and looking at 2021, it was kind of a great year from a fundamental standpoint. I think e-commerce was up almost 20%. Online advertising was up over 30%. Yet the internet, our internet index, the Truist Securities Internet Index, was down about 2 to 3%, which tells you that, exactly to your point, the macro really had much more of an impact. Macro concerns around inflation, around supply chain issues, et cetera, has had much more of an impact on valuations. Now we sit here looking at, a 2022 where valuations for big tech like an Alphabet or Google, like Meta or Facebook, at certainly at the lower end of their historical range, which we believe, kind of positions these names to do really well next year. Not all internet stocks are created equal. Clearly, when we put out our 2022 outlook, I think people weren't necessarily surprised by how well or how Alphabet again and Meta were topics of ours. They were more surprised by how Amazon weren't on the list. This is the first time we haven't had Amazon on our top 10 list for basically the last 10 years.
And we talked about that divergence, Meta and Google versus Amazon at the start of the show, and what a divergence it has been this year with Amazon really underperforming. But you like advertising next year, Amazon increasingly becoming a player in that space. Does that offset some of the e-commerce weakness that we might see? And also, of course, major cloud play. So is there value in an Amazon right now?
No, that's fair. That's a fair point. I think on the marketplace side of things, which is really the nuance we're trying to point out, Amazon is no longer, at least over the short term, say the next 12 months, is no longer going to be gaining share, beating and raising, which we've been accustomed to by Amazon for the last 10 years. Our channel checks suggest, one, that Q4 is tracking to online quarter, maybe slightly better, maybe even a miss. It's also showing that from an e-commerce market share standpoint, this is really the first quarter where they're going to be the first seasonally strong Q4, where they're going to basically grow in line with the market. Whereas last year, they went from claiming something like 39 cents of every dollar spent in Q4 of 2019 to 44 cents of every dollar spent during the holidays in 2020. In 2021, we think that's going to basically flatten out. We're technically cautious on Amazon, so we still have a buy. All we're saying is Amazon needs to really get their one-day delivery effort to encompass the vast majority of their inventory before we can start seeing them gaining more share. And that's going to take billions of dollars, and that's going to take at least the next 12 months for them to do that. On the advertising side, you're absolutely correct. Amazon is gaining gobs of market share in advertising, but they still have about 10% market share, or maybe even a little less. And AWS is obviously, the killer app in cloud computing. The only issue there is we already know that. We already, value Amazon on a very wealthy or a very healthy AWS business, and same with online advertising. Again, the new wrinkle is around marketplace.